I don't think that there will be a saturation point. I'm actually surprised that there haven't been more large announcements of companies planning to do this. It's all super new still, and we have no idea how this is going to play out. None of the purchases have started yet. We haven't even seen the category of company that I expect to kind of dominate this. This is only interesting if we get into the tens of billions and are sucking the life out of the fiat system.
Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hey everybody, Pete Rizzo, the Bitcoin historian on X, welcoming you to the Supply Shock podcast. A great episode for you today. CEO at Swan, Bitcoin, Cory Klippsten, joining us today to talk about a major announcement that just dropped, closing his Series C fundraising and also signing a Bitcoin Treasury management partnership agreement with Sequans, a French semiconductor giant, marking the latest advancement in a trend that has really taken the Bitcoin world by storm. Over 850,000 Bitcoin now sitting in Treasury at Bitcoin Treasury companies. These are public corporations that have, in a lot of cases, launched with a specific mandate to acquire Bitcoin. But of course, not all Bitcoin Treasury companies are equal. So here to break it down, we've got Cory. Cory, welcome to the podcast.
Hey, Pete. Good to see you again.
Always glad to have you. So let's talk about Sequans. Obviously, one of the more mature companies that has entered the space, right? So a company that has an existing semiconductor business. They're kind of working in this field and decided, we're profitable, we're making money. We want to kind of move into Bitcoin and kind of make that a part of our business. Maybe you can talk and share a little bit about how this partnership came together.
Yeah, so actually, it has been around for quite some time, and I would say that it actually is much more of a story about them kind of moving on and likely monetizing the existing business or spinning it out in some way over time, and that the company's primary purpose going forward is to accumulate Bitcoin. So this is very much one of those leveraged Bitcoin equities. Primary KPIs are around incrementing Bitcoin per share. So it is a full bore on the strategy, trying to become, follow in the footsteps of MicroStrategy.
So maybe we can take it from there. When did you get involved in the conversations with them as a business? And then, as these companies are thinking about, well, I mean, maybe let's just talk about it, right? Acquiring Bitcoin, can it be the sole purpose of a business? I mean, how do you think about this?
I mean, obviously, we've seen that it can come to be the sole purpose of a company. We've seen that with MicroStrategy, where even though there is a previously existing business, that's not the reason that pretty much anyone is buying MicroStrategy stock, and it's completely dwarfed by their treasury operations. And if you think something like Metaplanet over in Japan, I mean, it's obviously pretty much 100% focused on accumulating Bitcoin. So I think it's pretty obvious that these leveraged Bitcoin equity companies or LBEs are focused exclusively or, almost to the exclusion of anything else focused on acquiring Bitcoin. And yeah, that is something that I think at this stage, the market is accepting and in many cases preferring. I don't know if that's going to be the way it will be forever. And I think that there is probably an expectation. I think people want to at least hear that there's a plan to be a Bitcoin financial services company of some sort and take advantage of having Bitcoin on the balance sheet. You've always had lots and lots of, hey, maybe someday MicroStrategy becomes a Bitcoin bank, or you have, Nakamoto talking about doing financial services someday, or Pomp SPAC talking about doing Bitcoin financial services someday if they become an operating company. So I think that's kind of the natural expectation of where people think it will go. I'm not as sure that something outside of doing things related to Bitcoin and financial services is going to be accepted in the long run as being synergistic or kind of additive. It may just be seen as kind of orthogonal. And that's probably okay because it obviously worked with MicroStrategy. But what really matters is, can you get to scale, and can the Treasury operation start to suck in billions of dollars of institutional capital and get beyond kind of like the retail launch phase?
Well, let's break down the term here, and maybe I can press you a little bit on where you are in terms of thinking whether this model is good for Bitcoin. So you said leverage Bitcoin equities; these are Bitcoin treasuries. But in your to your point here, I think what you're trying to get across is that in a lot of cases, these corporations, what they're actually doing is they're leveraging the corporate debt and equity markets to secure that Bitcoin. Take me into the terminology. Why do you like leverage Bitcoin equities? Is
Yeah, well, so I think, a lot of people have said Bitcoin treasury companies historically, which suffers from having an acronym that's already taken. So BTC is a hard thing to say when you're talking about Bitcoin treasury companies. Also, I think the way that it's already been talked about and sort of is on different websites and things, it's basically about companies that have Bitcoin in their treasury. Which is far more companies than the ones that are actually uniquely focused on accumulating more Bitcoin through capital markets activities. And so there's a subset of companies that I would call leveraged Bitcoin equities, which is a term we came up with last year to distinguish between the two. So all leveraged Bitcoin equities are Bitcoin treasury companies, but not all Bitcoin treasury companies are leveraged Bitcoin equities. So MicroStrategy, a leveraged Bitcoin equity and a Bitcoin treasury company. Tesla is only a Bitcoin treasury company, right? Or Marathon is a Bitcoin treasury company, and they have a ton, right? They have 50,000 Bitcoins, but their primary KPI is not just, these treasury operations. So that's the difference between the two.
Well, in the Twitter sphere, there's still a lot of conflict around this. It seems like there's two camps. There's the suit coiners, right? They're the people who are accused of sort of selling out, getting on board with this kind of maybe something that resembles a more of a sort of, if not a grift and an express money chasing opportunity, right? For a long time in the Bitcoin community, many years was hold your keys, not your keys, not your coins. There was this kind of tremendous emphasis on self custody. A lot of dissatisfaction out there among people who maybe see Bitcoin treasuries as moving away from that right now. If maybe grandmothers can get exposure to these equities through traditional vehicles, but certainly their exposure to Bitcoin isn't what it would be even if they were holding kind of their own balance in their own wallet. How do you think through Bitcoin treasury companies as a vehicle for adoption? Is there a good and bad here, or there's just different approaches?
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
Yeah, of course, there's a good and bad with any kind of investing theme, and I think you're seeing already some kind of abuses enter the space, which is not surprising. But broadly, this is what a speculative attack on fiat actually looks like. And in particular, when you see one of these companies scale to the degree that MicroStrategy has and others will try to, it now gives an avenue for institutional money to flow into the space in a massive way. And in particular, I think what you'll see is fixed income coming into Bitcoin. So it's no surprise that you can split the return profile of Bitcoin into different tranches just very simply. And this is something that's been done for 10 years already. So this was something that was sold as early as 2016, 2017, 2018, a lot in Japan. Unsurprisingly, it's always in a market that's searching for yield. So you can do things like say, hey, I'll give you 12% per year. It's backed by the Bitcoin, but you're capped. You're capped at 12%. And anything above that goes to like the equity tranche. So you're just splitting the cash flows of Bitcoin into a debt tranche and an equity tranche. The debt tranche in the capital stack is senior to the equity tranche. And now somebody that has the equity tranche has levered Bitcoin, essentially. They're giving up the 12%, but you're using that money to multiply the amount of Bitcoin that you've bought, and then you get everything above 12%. And so you get juiced returns. But you have more downside risk. You have higher beta on the equity side, and you have lower risk. So you basically, the equity tranche has sold risk, or I'm sorry, the debt tranche has sold off the risk to the equity guys, and they hold more risk now. So that's not a new concept, and you see this in financial markets going back, centuries. So it was inevitable that it was going to explode at some point in Bitcoin, and it turns out that this is where it's exploded. You've got an equity tranche essentially in the equity of MicroStrategy, and you have them issuing convertible bonds first, and now 3 different kinds of preferreds, which is a lot more debt. And institutional investors are starting to learn about those, and they're starting to get rated, and you're seeing them go from, $85 to $120 is kind of what happened last week. You're kind of seeing the market wake up to the yields that are here and how safe these actually are compared to other similar yielding fixed income instruments that are available for purchase. And it's looking like this could be the thing that really drains a lot of fixed income into Bitcoin over the coming years. So that's really the end goal. I think what causes a lot of misgiving and just kind of like, hand wringing and conflict in the space is very justified, because to do the rocket booster phase of getting one of these companies to the point where it becomes attractive to institutional, has enough capacity for institutional flows to come in, there's essentially a venture capital stage. But it's already public, and so that venture capital is marketing like crazy to retail, institutions, family offices. It's like wherever they can find liquidity and investment in that stock for that rocket booster phase. And that's what you're seeing with, Metaplanet and Nakamoto and all these different ones. I mean, let alone all the tiny ones in these different markets around the world, whether it's Smarter Web and Alt BG, et cetera. It's not the end goal. Like it won't. What I posted last week was like, this doesn't matter to Bitcoin and Bitcoiners if they don't reach scale and attract institutional flows. Then yes, it is very similar to a penny stock or an ICO or something like that if they don't actually achieve scale.
Well, with Metaplanet specifically, maybe I'll take that as an example, because it was really the second kind of, maybe not exactly the second, but it did really kick off the second wave of the Bitcoin Treasury company kind of boom. And there were some unique market factors in Japan, right? There was the weak yen, there was the lack of an access to a Bitcoin ETF. Obviously, Japan kind of working to launch that later this year, but not there yet. And there was a tax penalty, right? So people who are kind of buying spot Bitcoin, selling spot Bitcoin, paying about 40% taxes to 10%. If they were holding this stock product. So, I mean, how do you think about the actual market condition opportunity? Is there something about Sequans here that it was attractive, or do you think this was just kind of a unique situation with Metaplanet and maybe won't be replicated in another treasury model?
Yeah, so it really was the tax arb more than anything, I think, is the main thing driving that. So I think, yeah, that's the main thing, is just a tax advantage vehicle versus holding spot Bitcoin. And so you can just.
But you expect that loophole to close eventually, right? Like that will.
It may, but those things can take years. And if they've grown to the point where they have such liquidity and such size that it just kind of like success begets success, all you need is a launch phase. And I think you're kind of seeing that a little bit with I forget what it's called, but I know the ticker is ALTBG, AltBG. What do they call themselves?
Blockchain group? Is that
the blockchain group or something? I don't know. Anyway, it's a French one, and they have a similar ARB essentially that you can basically park Bitcoin with them and be able to call that Bitcoin back, but it goes onto the balance sheet of the company, and so they essentially can sell convertible bonds where you can still call back your Bitcoin. So your downside essentially is the Bitcoin that you contributed. Whether you contribute in fiat or not, it's a way to go 1x long Bitcoin and not do worse than that, while still having essentially a free call option if the stock takes off. So that's a weird arbitrage where you're not incurring cap gains tax when you invest. And so that's another weird arbitrage and some of these exist in different markets in different ways. I think people are just kind of searching for them and trying to uncover where they are. As far as Sequans, I think what's really attractive there is that it actually trades on New York Stock Exchange. And so when you think about time to market and you think about, my own expectations for what will happen with Bitcoin price through the rest of the year, we're recording this on July 7th. Bitcoin purchases start tomorrow, Tuesday, July 8th. We didn't have to wait. So we were able to raise money into an existing company that's listed on the New York Stock Exchange. We don't have to wait for a merger. We don't have to wait for a de-SPAC. So all these companies that started in Q2, whether it's the Tether SPAC or Nakamoto or whatever, they can't buy Bitcoin yet because they have to wait for their audits, they have to wait for their mergers, they have to wait for their de-SPACs, they have to wait for everything to go through. And so they're kind of on pause. And so we actually got out to market first among this kind of like next crop of largish companies that have not, I mean, really just like expectations to scale and do this at an institutional level. Like I have no interest in doing this, little retail pump and dump stock play whatsoever. As you can imagine, like this is only interesting if we get into the tens of billions and are sucking the life out of the fiat system. And so being able to move fast is huge.
How do you make the split, right? So a lot of people maybe at home, kind of maybe coming from more of the crypto audience, they're excited about this market because it offers this kind of, exciting kind of gamification element. So, maybe take me through your own journey with Sequans and just think about how do you separate them, right? So how do you know what's the, penny stock that's hopping on the Bitcoin train to what's going to be the next meta planet, what's going to be, a company that could own, tens of thousands of Bitcoin? Like, how do you make that judgment?
I think you can just watch what people say and how they market it and how they talk about it. I mean, there's a lot of people talking about these companies and they're specifically focused on 100x gains, and they're specifically talking about, marketing them like tokens, and they're specifically marketing them to retail crypto Bitcoiner audiences, and not really talking about the long game at all. It's all just about kind of short-term gains. And so I would just kind of take people at their word and understand what they're trying to do. Now, that said, where you can kind of square the circle is, most of these do need again, like kind of like a retail rocket booster phase. And so that looks more like trading or, short-term trades, venture investing, something like that. And it's reasonable to expect that people that are going to trade anyway would trade these. That's going to happen. So what I always say, as I've said for many, many years, hodl, don't trade. I've been saying since 2019 or 20 or whatever, 5, 6, 7 years on Twitter, 99% of people that are in Bitcoin shouldn't be trading because you weren't a professional trader before you got into this. So why are you doing it now? That said, people are going to do it no matter what you say. So then it's like, for all our private clients, and all the Swan clients, my recommendation is, whatever your Bitcoin price exposure bucket is in your portfolio, hopefully it's a large percentage of your portfolio, but whatever that is, just make sure at least 80% of that is 1x long spot Bitcoin, the real thing, not paper Bitcoin, not a stonk, like real 1x non-leveraged, ideally in self-custody or at least collaborative custody with Swan Vault or something similar. And, just make sure that you keep your hodl stack clean and pristine.
Let's talk about the fixed income market. I'll just be honest, not a market that I know a ton about, right? It's sort of been set as like kind of a new goal for Bitcoin, right? It's kind of infiltrating this market, and again, the size and scope, maybe bigger than other markets that we could acquire. So it sounds like what you're saying is that the companies that can scale to get to the point where they're attractive to this fixed income market, but like, who is that? Who are the players there? And then what's the opportunity there? Like, what does that look like?
Yeah. So, I mean, you're talking about, I think it's something like, I don't know, I think it's like 300 trillion, maybe it's 147 trillion just in the USA, something like that. So it's just massive, what's out there. And this is every pension fund, this is every endowment. I mean, it's everything. It's governments, corporations. I mean, it's part of the 60-40 portfolio. The 40 is fixed income. That's been the recommendation for like the last 50 years. So tons of boomers and Gen X folks, that's what they hold, is still 40% fixed income. So it's all of that. It's that big pile. And yeah, and again, when you have so many people willing to buy the equity tranche or to take that sort of extra exposure to the upside of Bitcoin because of their expectation of what will happen over the coming decades, it's just really attractive to be able to give a generous rip on the bond portion, on the senior tranche that is just delivering a guaranteed return. So it's very attractive to fixed income investors and has a good risk reward profile. Basically better than anything else they can get.
So if you're a pension fund, that you do have options, right? You could buy, Bitcoin ETF exposure. We've seen some pensions come out and buy IBIT or things from BlackRock. You could buy MicroStrategy stock or any of these tranches. So it sounds like you expect this market will sort of, eventually maybe there'll be an explosion, it'll winnow down, and maybe you'll see a few different participants that have kind of the offerings like we've seen from strategy where there's different kind of tranches and different components and different flavors.
I think the big question will be how many of these companies will come into the market. I don't think that there will be a saturation point. I think the throttling will actually be on the execution and willingness of people to jump in. I think I'm actually surprised that there haven't been more large announcements of companies planning to do this. And, and again, none of the purchases have started yet. Really, I think Pomp's back. He got them to agree to do the first tranche of the funding into his current company that was already live and trading. So I think that's how he was able to make an early buy last week. But the rest of it will have to wait until the SPAC closes, I think. And again, the Tether Cantor deal, they can't buy yet, and Nakamoto isn't buying yet. So all of this stuff is TBD. And it hasn't even kicked off yet in a big way.
So if you are able to kind of be one of these breakout companies and acquire a lot of Bitcoin, though, it sounds like even you are still you would acknowledge that, it's not quite clear how the owning Bitcoin part essentially translates into an opportunity, right? That's the part that everyone's trying to figure out. Is that fair?
No, I think the opportunity is that you can leverage capital markets to arb the CAGR of Bitcoin versus the cost of capital. So it's cheaper to borrow and issue equity. That cost of capital is a lot lower than the CAGR of Bitcoin. That's the arb. And that's what companies can do. They can match the duration of these fixed income investors, and they can tranche this out in a way that retail just can't do. So there is a real arbitrage here. This is actually a little bit of financial engineering and just kind of recognition of how capital markets work. And this is opening the floodgates for the speculative attack that Pierre and Bitstein wrote about more than 10 years ago.
Right. So when do the floodgates actually start opening? Right. So you're saying that the money's being raised.
Well, they've been open for a while with MicroStrategy and Metaplanet. My point is that all the new entrants haven't even gotten off the starting line yet.
Right. And I think the question that people are trying to get to is right is like how big does that come? How quickly? Right. We've seen, just for myself as a market participant, has been a bit outside this. Right. We've seen the activist shareholder attempts on Microsoft, on Facebook, right? We've seen kind of calls from larger companies. There was Dell Computing, right? Sort of so appeals from investors to kind of get them to adopt a Bitcoin treasury strategy. That doesn't seem like it's advanced, that much. We've seen a lot of new entrants raise capital to then buy Bitcoin. But as you said, with pension funds and kind of these large funds, they're still on the sideline. So when does this, what's the sequencing here that you expect to see?
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
What is the Sequans? Yes. No, I mean, I think it really, for the ones that I think have the potential to scale in the deepest capital markets in the world, which is United States. I mean, I think it starts tomorrow. I think our purchases start tomorrow, and I think that really kind of kicks it off. And then, I don't have any inside information on Nakamoto, but I believe that they will have their merger closed sometime in August, latest September. And then I think, the Cantor CEP 21 should be sometime in, Q4, I think. And so they'll be able to start capital market operations. And then whatever Pomp's able to raise, that should be kicking off as soon as his de-SPAC is complete. I don't know when that is.
Well, what would you say, like, when people are asking, like, what's the opportunity, right? People know that strategy is sort of has an unassailable lead at this point, right? Nobody, I think, expects any company to pass MicroStrategy or strategy rather in terms of its total adoption.
Yeah, there's size for sure, but if you're an equity investor and you're looking at holding it, like law of large numbers just kind of dictates that there are going to be opportunities for companies that are starting from a smaller base to outperform in percentage terms, as you've seen with Metaplanet. Kind of, I don't know, 4 or 5xing MicroStrategy over the last year.
And so, how do you think about this as it relates to the Swan business, right? How much of your kind of time is kind of focusing on this market as opposed to kind of the institutional market outside of this opportunity?
I mean, it's merged so much because our private clients and our 2,000 business clients, they are consuming the same information that you and I are, and they're starting to think about it in these terms. And that's what drew us into this market in the first place, was the back half of last year. So many of our private clients were coming in saying, hey, it looks like, Saylor's doing a lot of things. What are the things he's doing, and which of those are applicable to my business, even though they might be a private business or like a small micro cap or something like that. And so we had to start to think about it in those terms, and we started to meet all the people that were involved in this. And Ben Workman came on in Q4 to consult to us, and then became chief investment officer at Swan. And so we talked to private clients and investors and hedge funds and multifamily offices and businesses all the time about this stuff. And so it's just kind of natural that this becomes an offering of Swan Institutional. And as far as us being kind of like full throated, kind of being the marketing face of a company, that's just a thing that we're doing with Sequans. But the custody and the purchasing and the liquidity and the dashboards and the analytics and kind of everything else that comes along with it, that whole operating system is something that we already make available to our 2,000 business customers, and have plans and current conversations with other leveraged Bitcoin equity projects as well, essentially to be the back end for that.
So these clients that you're talking to, these 2,000 businesses, say they come to you and they say, "Hey, we want to own Bitcoin." So you offer the suite of services that enable them to do that. Are you offering consulting as well, where you're saying, here's how much Bitcoin acquisition makes sense for your business, or those questions that you're getting?
I mean, we talk to them about every aspect of their portfolio allocation and kind of how much Bitcoin makes sense. And as always, it's always kind of in lockstep with their education level and their understanding. And that's been kind of, I think, the key to never having kind of an unhappy customer, is because we don't encourage people to go too deep off the edge when they don't understand what they're buying. So it's always crucial to just kind of bring people along. And yeah, I mean, the more you know, the more you buy.
Maybe because when I think about mid-market businesses that have adopted this strategy, the story that always comes to mind is Tahini's. This was a company that was in Canada during COVID, a pretty small kind of chain of businesses. Again, I'm trying to make this kind of when you talk about fixed income, these larger markets, it's hard to kind of make it real, right? This was a business, kind of a mom and pop family kind of owned small chain of shawarma restaurants. They've expanded quite considerably. They bought Bitcoin. Obviously, that Bitcoin appreciated. That was able to kind of bring real benefits to the business. So, is that what these businesses are looking for? Like those kind of stories? Is that what you expect to see, where just kind of saving in Bitcoin and
Yeah, that's
becomes
the primary use case of Bitcoin, is just having it on your balance sheet and letting it appreciate in purchasing power over time. And we've seen that time and time again. I mean, we have clients that have bought thousands of Bitcoin through us, and have big fat stacks, and that's on their balance sheet. And it's setting them up for great futures.
Well, we got to talk about the recent transition on this front. There's been a bit of a co-opting of the Bitcoin Treasury company, or leveraged Bitcoin equity strategy, as you put it, into the digital asset Treasury company. As we saw Tom Lee kind of come out last week and strike a deal with a company to build an Ethereum Treasury company. We've seen Joe Lubin kind of do the same. It does seem to be that the kind of larger crypto market beyond Bitcoin is sort of waking up, or fast following in some regards this strategy. What do you think about these newer entrants that are coming to market?
I mean, I think it's just noise. I think the whole Ethereum thing was basically just Lubin realizing that if he spent a little bit of his ill-gotten stack on promoting, this is like the last gasp of Ethereum as a store of value, and they're kind of running two narratives out there. One is about how it's like somehow going to accrue value because stable coins, which is not true because all the banks are going to use private chains, obviously. So
We're
that's not,
living in the blockchain renaissance. I think
yeah,
that's
that's
kind
not going to really do anything for them. Plus, their transaction sizes are going to be huge, and you're just paying transaction fees, regardless of how large the transactions are. So that whole thesis is crazy. But yeah, I think this is basically just some people unfortunately taking the payday, and you're guaranteeing yachts for your great grandkids. It's kind of hard not to say yes for some of these folks. But I think it's just a flash in the pan, and I think it's just kind of like a every 3 to 6 months there's a new tagline that goes around in banker circles while they're working on hot money deals, and they're saying digital asset treasuries, and it doesn't mean shit. Bitcoin's the only one that matters.
Yeah, do you see that narrative kind of gaining some steam though? Because it does seem like the altcoin or kind of market beyond Bitcoin is just kind of struggling for a narrative right now, and they've seemed to have kind of grafted on this as a potential solution. But obviously, I think we both would expect it to be short lived. But that said, I mean, these markets, can be very irrational. So curious your
Yeah.
take on whether we'll see more of them.
It's just noise. I just don't care. Stay focused on Bitcoin.
So in terms of what we're going to see maybe in the second half of this year, it sounds like you're plugged into at least the institutional cycle. There has been kind of some thinking that we are in a bull market, right? Maybe heading to the end of a bull market, or perhaps that this bull market is different. How are you thinking about it now, especially given these companies and flows and things that are coming to the space that really haven't been seen before?
Yeah. So obviously, base case is it looks like the other ones, and there's a blow off top before the end of the year because that happened in 13, 17, and 21.
Right, a
There's, I
classic
think,
4-year cycle.
but I think I mean, by definition, there's more of a chance that it extends into 2026 than the other ones since it didn't with the other ones. So we're talking about the future. I don't know. I mean, I think that there's a decent chance. I don't think it's over 50%, but there's a decent chance that a bull market peak happens after the end of the year. Um, yeah, I don't know. And I think also there's probably less of a chance of just a massive blow off top where you just go, 2x in 4 weeks or something like that. Still possible, but just know that whatever the profile of the blow off top is, that's what you'll be giving back right away, like very quickly, and then there will still be like an additional pullback after that. So, for example, like if you trundled up, from here at like 108 and got up to like, just let's just use round numbers. Let's say you got to like 150, and then in the course of like 2 or 3 weeks, you went from 150 to 300. You'll probably give all of that back over the next 6 months and be back down to 150. And then you'll still see another bear market that will decline from the 150 down to something like where we are now.
Hmm. Well,
So
maybe I'll interject and kind of talk about the current market theory. It seems like there's a bit of a Bitcoin Treasury Doomsday theory out there, which is that people are already sort of connecting this market movement to the formation of a next bubble. I was permissionless in Brooklyn a couple weeks ago, and this was kind of the kind of narrative that everyone had seemed to kind of settle on, was essentially that what's going to happen with these Bitcoin treasury companies is they're going to be the hot meta for a while. These companies are going to get overextended. Maybe they'll take on debt and leverage at some of these higher numbers that you spoke about, and there'll be eventually kind of an unwinding of these companies. Is that what you see? Do you agree with that?
I don't think so, because you're just not seeing that type of money flow into them yet. You're not seeing much deployed yet. Like the numbers are just tiny still, like infinitesimal compared to the size of the market, and tiny compared to MicroStrategy alone. Like they're just all so small. So I just think this is like this is in its infancy, and it's something that will grow. And we haven't even seen the category of company that I expect to kind of dominate this, 5 years from now, will not just be purpose built from the ground up. It'll be companies that actually have, cash flows and otherwise would be leveraged buyout targets, LBOs, which is why we named it LBEs, because it actually has the same characteristics. And instead of going private, which happens 30 to 40 times a year, a major market public stock in the US gets taken private off NYSE or NASDAQ like 30 to 40 times a year. And I think that's probably the same number of starts that you'll see for new LBEs in 5 to 10 years. where you have good cash flow and a low multiple, which means that the market doesn't trust you to reinvest your profits into your business. And instead, you'll put that into Bitcoin. And I think that will be the profile of the majority of LBEs in the future. I think right now it's just, as you can imagine, it's speculative and it's new. And so people are just coming up with like however they can start a company. So it's just like, let's grab a shell and grab some capital and let's start a company. Right. And that's the speculative phase of this. But this is not anything. And this is another thing that a lot of the bankers were saying over the summer and around the Bitcoin conference is like, hey, just like back in 2021, when we got 12 miners public, we're going to get 12 treasury companies public, and that's going to be the cohort. And that's kind of the thing. And that's it. I don't believe that at all. I think there's a limited number of miners that make sense to have public. I don't think there's a limit on the number of companies that own and hold Bitcoin and aggressively or conservatively try to acquire more opportunistically, or full bore like Metaplanet and MicroStrategy. I think that it's all super new still, and we have no idea how this is going to play out. And I think anyone, first of all, almost everybody talking confidently about what they think is going to happen, they don't study it as much as I do. And I have no idea what's going to happen. So I don't actually put much stock in their forecasts.
Well, as we wind down, maybe, let's start where we, I guess, agree, right? I think we both agree that most companies in the future will own Bitcoin, right? It just makes sense. Bitcoin is going to be the money of the world. So if hyper-Bitcoinization plays out, you'd expect all businesses to own Bitcoin and be paying each other in Bitcoin, paying their bills in Bitcoin. Obviously, we're a long way off from that. I think what people have a hard time figuring out is what you were saying, is like, how does this progression happen? So I know you did say that you don't have the faintest idea, but what is how do we progress towards that, right? Because obviously in a hyper Bitcoinized world, maybe I wouldn't expect a company like Metaplanet to exist to just accumulate Bitcoin for shareholders. It doesn't really make a ton of sense to me why you would have a company that, in a world where Bitcoin's money, is a public vehicle that just acquires more money, right? I'm not sure like what that fits. So how do you have a sense, I guess, of like how you think we might get from there to there, or is it just a total black box?
No, I mean, I think that you are seeing a bunch of companies choose to capitalize themselves and to build up big balance sheets of Bitcoin, and they believe that there's a lot of option value there. So that alone is worth doing if you believe in the future value of Bitcoin continuing to appreciate in purchasing power. It gives you a lot of optionality, and you can go into other businesses if that makes sense to do. It already makes sense today to leverage a Bitcoin balance sheet for financial services in a bunch of different ways. So if you're selling Bitcoin, you can face your own customers and not pay brokerage fees to OTC desks or exchanges. If you want to sell asset-backed loans, you can take out a wholesale line at like 7%, 70% loan to value, and then turn around and do 50% loan to value retail loans at 9% and clip that spread and use your Bitcoin balance sheet that way. And just kind of on and on. So I think just being able to use a big balance sheet to fund the growth of a business, and then also just have, it's the same people doing the same strategies. Like it's the same team at Swan that is doing our investment strategy for Sequans, that's doing the investment strategies for our 2,000 business clients, that's doing webinars for our private clients, that's posting articles and research and posting on Twitter and doing shows and videos and coming on podcasts. Like it's all the same thing. It's the same motion. It's the same activity. So it's just kind of the best synergistic way to go about this is to do it with a Bitcoin financial services company.
Yeah, fascinating stuff, right? The Bitcoin standard, we know it's coming, but hard to tell exactly how it'll play out. Though obviously it seems like the attention is on corporate adoption right now. Cory, any final thoughts, I guess, before we cut out?
No, I just think this is really exciting. It's different. It's scary. I think whenever there's something new that comes along, that's when you see people try to hash it out. I would just try to remember that, some of these things were always inevitable. This is what Hal Finney wrote about in 2010, and thinking that there were going to be 10,000 different Bitcoin banks or Bitcoin financial institutions. And I think what you're seeing now is it came out of left field a little bit, but I think what you're seeing is the capitalization of Bitcoin financial institutions.
It is amazing just how long it took Sailor's strategy to get copied, right? I mean, if you think about how fast people are moving towards this strategy now, he really did have a 4 year, period where he was the only person kind of working in this direction.
It goes to show you, and this is my own, one data point, but this is my view. Is I think that the story and how you talk about it is so incredibly important, and I think that the story he told at the beginning of November at the Cantor conference down in Florida, when he talked about the refining capital and the way he laid it out on the slide, I think that was the one that finally turned a lot of people on Wall Street into believers, and or at least understanders, people that could kind of grok what was going on. And then obviously the red wave and the pump in MicroStrategy's price the back half of last year was all supportive of that. But I think it was really hard to see. I think it was really hard to see where it was going to go, and what was going to happen prior to that. So sometimes it's just finding the right way to describe something. What's so funny is somebody unearthed a video of him talking, I think in like 2003 or 2004, and it's basically almost word for word the same speech, and it talks about refining data, like using the data stream or big data or whatever, and refining that into different assets or something like that. And it was kind of the same thing. It just needed the right analogy or the right framework to help people see it. And I think November was really the key to it, when Wall Street really woke up, and that's when we really started turning our attention even more toward this, beyond just kind of having casual conversations with private clients about it. We were like, okay, this is happening, and this is something that I think is going to take the world by storm.
Well, it'll be fascinating to see. Cory, appreciate you being on the podcast. Maybe direct people where they can get more information about your work with Sequans and all that's going on at Swan.
Yeah, absolutely. So I would just follow the Swan handle on Twitter, SWAN. We'll have lots and lots more news coming out. And then I'm always Cory Klippsten on Twitter. So I'm sorry, X. So you can follow me there.
Yeah, always good for a hot take. Cory, appreciate you coming on. And we'll be with you shortly next week with some new episodes as well. But Digital Asset Summit coming to London. We'll be there bringing a Bitcoin perspective to the next Blockworks conference. A reminder, all the permissionless videos online now as well. So if you want to hear the talk about Bitcoin treasury companies and digital asset treasuries, you can go there and look at that on YouTube. But we'll be right back with some more content after this. This has been Supply Shock, a Blockworks podcast.